Hey everybody, happy Thursday, September 11th. It's time for another market update. I'm actually recording this Wednesday, September 10th in the afternoon. I'll be traveling today, Thursday, so I will send this out Thursday. You'll get this Thursday. I'll post it on social media Thursday, but I'm recording on Wednesday. So it's been a good couple weeks for mortgage rates. They continue to rally. But going back to last Friday, we were going to be getting the big BLS jobs report for the month of August. As we've talked about, this has been a killer for us over the last couple of years. Every time we start to rally and rates start to come down, this report comes out and rates go back up. But thankfully, I can report that we finally got a good BLS jobs report that worked in our favor. Jobs creation came in lower than expected. Unemployment ticked up a little bit, and it was exactly what we needed, to keep rates rallying, to keep that Fed cut, about a week from now on the table. So let's take a closer look how that all panned out. So again, this is for the month of August. There's two parts of this BLS jobs survey. There's the business establishment survey where they take some payroll data, do some math, and come out with some numbers. And this has really been the one that's killed us the most. And, it's supposed to come out about 75,000 seasonally adjusted jobs were created. It only came in up with 22,000 jobs created. So big miss there. Continues to show signs that the labor market is weakening, which is what we want. We want the Fed to think that so that they could cut rates. If they think everything's great, they'll keep rates where they're at. Majority of those jobs came from healthcare and social assistance. And then there was plus 90,000 with the birth death model, which again is a silly way they do these things. They're trying to figure out how many jobs were created by new businesses opening and how many jobs went away and so forth. And this tends to be the big number. Again, 22,000. If we took this 90,000 away, it'd be negative, 68,000. So time will tell if that held true, but we'll get that into a second. And then revisions. They did another 21,000 in revisions to the month of June and July. June originally was reported 147,000 jobs. It is now, after the two revisions, at negative 13,000 jobs. So 160,000 job difference there. That's a big difference. Imagine if we got that negative 13 to begin with in the month of June, where we'd be at. Rates would have already started rallying, all that kind of stuff. So, you can't do anything about it now, but it's very frustrating to see. And then July originally came in at 73. They actually pushed this up 6,000. But it'll be interesting to see. There's one more revision. Does that 6 go away? Does it come down even further, like June did? So again, overall, some negative revisions there, and only came in at 22,000 jobs created. So this was a good part. Second part we got was the household survey. So this is where they actually call people and talk to them about the unemployment survey, or about how they're doing, looking for a job, and so forth. And the reported number came in at 4.3, which was expected. It ticked up from 4.2%. There was 288,000 jobs created, but the labor force, 436,000 people joined the labor force. So that's why the unemployment went up a little bit. The U6, which is kind of the all-encompassing, that went from 7.9 to 8.1. That doesn't drop people out if you haven't looked for a job or can't find a job you want to apply for, kind of thing. And so it keeps everybody in there. And that went from 7.9 to 8.1, which is the highest in 4 years. So that's obviously going up. And then the other part, we're losing the quality of jobs. The full-time jobs was down 357,000 jobs. Part-time work jumped by 597,000 jobs. And this one was interesting. Working part-time because can't find full-time was up to 1.31 million people, which is the second highest since COVID. So again, people, even with we're up 288,000 jobs, but that they were all part-time jobs. We're losing full-time work. If people can't get full-time work, that's not that's not a good thing for the economy. Overall, again, this was a good BLS jobs report. It showed weakness. It showed that things aren't as great as Chairman Powell has said in the labor market. And again, that's kind of exactly what we needed to get them to cut rates. Next thing, so this is going to be very frustrating. The QCEW goes back and looks at these BLS jobs reports and does the actual math, counts all the jobs, and goes back and looks at it. And so we get this, it's dated though. So it's from March of 24 to March of 25. So at this point, we're almost 6 months past this. So it doesn't really have an effect on the now. It's just a snapshot of what was going on back then. And basically, when they did all the math off these job reports and came back, there's actually 911,000 less jobs created over that year than were originally reported, which is an average of 75,000 less jobs per month, which is basically 52% of the jobs that they reported that were created did not exist. Again, this does not have anything to do with now. Like the markets aren't going to be like, oh, great, it's this is old news at this point. However, it does show that the labor market wasn't as great as everybody kept saying it was, which we kind of all knew. And the second part it plays into is, going back to last time they started cutting rates and whatnot. People, made the point, hey, well, they cut rates and or they cut their rates and mortgage rates start going up. So this green line is mortgage rates, this blue line is the Fed fund rate. But as you can see, before that first rate cut, mortgage rates were coming down pretty steadily going into that cut. We already knew that they were going to cut, so mortgage rates were coming down with it. And then they kind of stayed steady where they were on the low sixes for a second there. And then all of a sudden they started ticking up. What happened right there? And what happened was the jobs, I'm sorry, right here, go back one. The jobs reports came out. All these jobs report, these initial numbers, 254, 227, 256, they all got cut way down. In these numbers, even they came down. But then when we look at that QCW number, even further than this, they don't tell us month by month, but just take 75,000 off all these numbers and where we would be. So, this chart, rates did go up last time they started cutting rates, but that didn't have to do with what the Fed was doing. That had to do with the job market. That had to do with those BLS job numbers coming out and what people thought would happen going forward. With the strong job numbers, the markets thought, well, okay, we've already come down. Fed's going to stop cutting, which they did. So that's what happened there. So it's not the same situation we were back then, as far as what's going to happen when the Fed starts cutting. As long as these job numbers are reported accurately, if they continue to show weakness, then as the Fed cuts and inflation stays, where it is, then we'll see lower rates. If inflation ticks up, even if the Fed cuts, if they say wrong things in the press conference, or if we start seeing strong job numbers, we could see these spread out like they did over the last year or so. So again, just a little frustrating that QCW numbers coming out showing such a big difference than what was originally reported. So again, very frustrating. Next thing we got. So we got PPI for the month of August. They thought it was going to go up 0.3% month over month, 0.3% year over year. Again, PPI is producer inflation. So the cost to make the goods that we buy. It actually came in at negative 0.1 for both. And they made last month's July number go from plus 0.9% to only plus 0.7%. So this was a good number for us. This definitely locked in that the Fed's going to cut rates at their next meeting. But the big one is tomorrow, the CPI. So by the time you see this video, the new CPI inflation will come out. Again, they're expecting plus 0.3, plus 0.3. If it comes out how PPI did, then we could see a nice little rally. Even if it just comes in as expected, we should probably expect to kind of be where we're at because again, the big news will be the Fed press conference coming up next week. Next thing, initial jobless claims are expected to be about 234,000. We shall see how that comes out tomorrow. Those have been pretty steady in the 230s, but if we start to see those ticking up, that's more evidence that the labor market is slowing. So where are we today? The average conventional is actually down to 6.29%. Last week when we talked was 6.45, which was great. On Friday, we got that big jump. We dropped from 6.45 to 6.29. Since then, we basically held our gains. There was one bad day. We got that back. Today's been pretty good with PPI. But again, that CPI inflation report on deck is going to be a big one. And then next Wednesday, the Fed concludes their meeting and announces what they're going to do. Right now, the markets are saying 100% chance they cut, but there's actually a 10% chance that they cut half a point, not just a quarter point. That would be best case scenario probably for us. That would be a nice little rally. Right now, if they just cut a quarter point, we've already kind of got that. The markets have already built that in. The rates won't come down further unless we get really dovish talk, really nice things said at the press conference afterwards about their next meeting. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, let's hope this rally continues and have a great week, everybody. Thanks a lot.